Yeah. Please tell me that I can't, that I won't, that I fail, that I'll never make it out, yeah. Please tell me all the bad, never good, fill my head full of every single doubt, yeah. Please say any negative thoughts, I pop off when I hear people say I cannot. I get off to the thought of proving everyone wrong, I won't stop to the top, so you better back off and get lost. I'ma stay loud, stay proud, never running out, never heading south. I'll be spreading out, call it word of mouth, can't put me down, I'll be getting loud. You can have your doubts, not what I'm about, have your cloud, it be raining out, I keep making sound, go another round, I'm legend bound, can't stop me now.
You don't wanna fuck with me, a slow burn like a disease. Just tell me that I can and I'll show you things that you couldn't believe. Just tell me that I can. Just tell me that I can. Just tell me that I can. Just tell me that I can.
What's good, everybody? It's your boy Reckless Ray Dinero, and we're back at it again for another episode of Future Financial Strategies. We're coming at you on Sunday, August 13th. First and foremost, shout out to the Back Chasers. You guys will be getting this first. The rest of you will be getting this on August 16th, which is Hump Day. Obviously, if this is your first time here, definitely catch that like button and that subscribe button. And if this is of value to you, let's catch that I was going to say Bitcoin button. Let's catch that share button as well, because we're not trying to get rich over here by ourselves. As always, shout out to the Back Chasers. You get it today. If you would like to get it the day of recording, which is usually 72 hours before the general public, you can join the Bag Chasers. That is not my Patreon group. That is a Patreon group that is owned and operated by the one, the only Anton Daniels of AntonDaniels.com. I am also a part of that group. You can catch me in the cryptocurrency section, chopping it up. I tap in on a few other sections, but the cryptocurrency section is kind of my home base. Also, they get these videos before everybody else. Today is a special video. I am dedicating this video to Security Boss. So we had a little back and forth on her live, and I told her, full disclosure, that I was going to do a response video specifically for her, because apparently her and Mr. Boss, while they are wonderful entrepreneurs, there's a difference between being an entrepreneur and being an investor. And this is going to be a telltale sign that if you get the response from me that it's just math, the breakdown is going to be succinct. It's going to be detailed. It's going to be targeted at points. And your boy has receipts. So before we get into that, we're going to do the thing that we've been doing all this year since I decided to build a portfolio specifically to show how this is done, so that people don't make the erroneous mistakes that Security Boss and Mr. Boss have apparently made trying to get into these crypto waters. And I understand it is very confusing. It is the Wild West. It is unregulated. It is high risk. It is high reward. It is high volatility. I will never and never have said that those things were not true about this space, but I'm also providing the solution. You are watching me build a portfolio with my money with receipts. So before we get into that, we're going to go ahead and jump in, and we're going to start breaking down, because I do have my deliverables to the core audience. Obviously, I'm doing this as a favor. We're going back a few episodes because people don't watch my content. They see me on here and they know me from my panel stuff. And unfortunately, I'm never asked to talk on panels about things that I am actually have expertise in. Having been in this space for 10 years, having built a portfolio from scratch that is pretty substantial at this point. Having utilized this space to get my house, clear my debt, pay off my car, bunch of, everybody in this space isn't super rich. You got to stop believing everything you see. Like sometimes people build stuff. You got to build from scratch. You got to come from the dirt. I did not come into this space with a bunch of money. When I started investing, I was making roughly, I'd say almost $40,000 a year. Almost. Yeah. So I didn't start off with a lump sum of money. I didn't have a foundation to start from. I built everything that I have myself from scratch. I've been financially on my own since I was 16. So I don't do excuses. I don't poo-poo on other business ventures that have not worked out, that work out for other people. I don't immediately jump to saying that something doesn't work because I don't understand it. It's okay to say that you don't know. I don't go into marriage conversations talking from any relationship conversation talking from any context but my own. And people who have been married successfully, like Security Boss, I don't really have that much pushback for them because they figured it out. They got it right. The one thing that I will say, and that I do regularly say, is that like if you're not actively in the dating market, I don't think that you have the context of what's actually out there. But like when it comes to marriage, I can say I don't know. I've never been married, so I don't know. But you should have that grace the way that we talk down to others in our areas of expertise. If you walk into somebody's waters and they're telling you that you don't know, and you don't know what you don't know, you might want to tap in and humble yourself and get that education, just like we do when we get poured into from you guys about marriage and how marriage works, because you guys have successfully been doing it for a long time. I've been successfully doing this for 10 years. So here we go. Let's jump into it. We're going to get to the fun stuff first. Let's share the first screen. As always, we start these episodes off with the winners and losers of the last 24 hours. So we're going to get into this top 5. I got it blown up for you real good there. Let's see what it looks like. Let's make me even smaller because I am not necessarily. Oh, nope. We got to go back over here because, well, I'm not that important. I want you to be able to see the bottom. Actually, you know what? We can just go here and I'll just scroll it up for you. Okay. On the winners, number 1 at rank 468, Blue Zelly BLZ with a gain of 63.8%. Nice. Not familiar with that project. Not familiar with any of these projects, actually. This is going to be interesting. Okay. So, number 2 at a rank of 414. Quiz Talk QTCON with a gain of 52% in the last 24 hours. Number 3 at a rank of 969. Solid number. I like that number. BitRock, BROCK, with a gain of 42.2% in the last 24 hours. Number 4 at a rank of 503. Sommelier, SOMM, with a gain of 31.7% in the last 24 hours. And number 5, rounding out the top 5 gainers in the last 24 hours as per CoinGecko. Solid crypto research platform, I'd add. I love it. I use it. I use it for portfolio tracking, as you all know. And number 5, last but not least, with a rank of 976, we have PodFast, $FAST, with a gain of 33.9% in the last 24 hours. Now, hold on. Let me scroll this up so that you can see these bottom ones. Hold on a second. Let's see here. We need to go. Let's see. Up to, I think, there. Jockeying 2 screens and go down 1. There we go. Now you can see it over my big dumb head. Okay, so now over to the losers, which is out of order. Ah, geez, we're going to have to reload this page. Bloop, bloop. Oh, Jesus. Okay. Wow. That's crazy. Okay, so we had some movement. Apparently, the X token has taken the number one spot. With a gain of 94.5% in the last 24 hours. This is updating live, so the numbers are changing. That's the reason this changed. Apparently, somebody is pumping the X token. That is not in any way tied to X, formerly known as Twitter. They just stole their logo. And yeah, don't invest in scams, or you could end up in the same boat of thinking crypto is garbage, like Security Boss. This isn't a good idea, people. I'm just saying. Probably not a good. And they done $2,446,802. Really, y'all just trying to get rich tomorrow, which is also a reason that people lose money, specifically on Bitcoin. You trying to get rich tomorrow. Short-term mindset doesn't get long-term rewards. People. It's the difference between gambling and investing. Over here, we are investors. We do not gamble. We make educated decisions. Okay, so now over to the top 5 losers. Hopefully none of you are in any of these projects. I hope all of you are in these projects and at least winning something. You don't want to be on this chart. I was on this chart a couple of weeks ago on this list. It didn't feel good. Didn't like it, but we working our way back. It's okay. Now, here we go. Number 1 at rank 770, we have PAL AI, PALL, and they have had a loss of 15% in the last 24 hours. This is actually not a terrible for crypto top losers list. This is normal. At number 2, we have at 606, we have Dream Machine token, DMT. I see what they did there. They have had a loss of 14.1% in the last 24 hours. Number 3, we are looking at Taraxa, Tara, and they have had a loss. They're at rank 491, and they have had a loss of 14.5% in the last 24 hours. Number 4, we have DNX, and they have had a loss of 14.3% in the last 24 hours. At number 5, we have Open Exchange Token, OX, and they're at rank 148, and they have had a loss of 13.5% in the last 24 hours. Now we're going to move to the next screen and get the updates about my portfolio. Let's talk about my mess. Okay, so give you guys a pie chart here. Obviously, we are up this week beautifully, might I add. We are sitting at 37.74%. Obviously, me personally, for a portfolio that is not 100% Bitcoin, we look at a gain of 30% is my metric. So, like, if I'm under 30%, I'm starting to feel kind of bad. Obviously, for those of you who are investing in IRAs and bonds and stuff of that nature, this is phenomenal. 30% is my metric for a bull or non-bull run year. We are not in the bull run yet, so I shoot to go up 30% in gains. I'd say like that's my stretch goal. So we are above the stretch goal. It was a little bit lower last week. There's been some things moving around, and we're going to talk about those things. So let's jump right into it. As we have had some moves, we did not do any purchases this week, but we did have some moves. So obviously last week we had Curve had an issue. It was down. Now, this week we had some pumps, which is awesome. Some pre bull run pumps. Now, as we look at this here, oh, Jesus Christ, it's still pumping. Okay, I'm going to go ahead and get through the top 10, and then we're going to get to the exciting stuff because apparently everybody loses money in crypto except for your boy over here. We both lose and win money. So, and we take them in stride because we make educated positions. Now, let's take a look and see what we got going. So, number 1, we have Ethereum, ETH. Number 2, we have Synthetics Network, SNX. Number 3, we have USD Coin, USDC. Number 4, we have Staked Yearn Curve Vault, ST-YCRV. Number 5, we have Nasdaq, NSDX. Number 6, we have Arbitrum, ARB. Number 7, we have Thor Wallet Dex, TGT. Number 8, we have Wrapped Bitcoin, WBTC. Number 9, we have Cosmos Hub, ATOM. And number 10, the original orange pill, we have Bitcoin, BTC. Now, that is the portfolio that we made together this year. These are the rankings for this year before anyone wants to take things that I say out of context. The overall portfolio would be Bitcoin number 1, Ethereum number 2, and then everything else, basically. Because around here, we do our due diligence, we build our foundation, we secure the easy wins. 90% of any coin that's not Bitcoin or Ethereum are in this portfolio to get consolidated at the end of the year and collect our gains and put them into Bitcoin and Ethereum. Say that again. We invest in the other positions so that when they go up during the bull run, they go up more than Bitcoin and Ethereum. We consolidate them into Bitcoin and Ethereum. Obviously, I'm a huge advocate of Bitcoin and Ethereum. They're both long-term holds. Things that changed this week, as you can see here, Thordex wallet. I'll go ahead and just leave the highlighter on there. The past 7 days, 131% gain. The past 24 hours, 37% gain. Past 1 hour, 4.4% gain. We're green across the board. We're over 100% gain on this one. Now, Nasdaq is down. This is also producing income, though. It's down 28.5%. Do not care. Literally everything else is green. Very green. This is how you navigate a portfolio. Not everything makes money all the time. Not everything's going to be in the green all the time, folks. You're investing. My short-term investments are 12 months. That's for the short term. Also, I don't buy stuff when it's up like 1,000%. That's also probably a key metric and not, making a short-term play to get short-term results. That's called gambling. Most of the time, the house wins. When it comes to crypto, I'm the house. Let's keep it moving. So now we're going to jump into the reaction because this is all going to be Bitcoin focused. We're going to go based off of some of the statements that were made at the show that I was typing hard in the chat in. With Security Boss. Now, I've got much respect for her in her area of expertise. Apparently, her and her husband are entrepreneurs. They own some businesses. Getting money and investing are two totally different skill sets. I'm going to say that off the beginning. So, setting up a business, knowing how to finesse a business, those things do not make you a good investor. That makes you a good entrepreneur. And I do believe that most likely, obviously, anyone can say anything on the internet, that they are good entrepreneurs. I definitely dial in and know that they know their marriage seems to be good. The advice that she gives seems to be solid. The stuff that she pours into about marriage, I sit down and take notes when she's talking. Now, do I listen to necessarily everybody? No, but it seems like they got a good thing going, and I do listen to them for that. But when people get emotional, this is the other issue. You do not get emotional about money. It's just math, people. It is just math. You don't need to feel some type of way. You shouldn't feel some type of way about money. You shouldn't feel some type of way about business. That's who has feelings and emotions about those two things? The losers. So when I tell you that I'm cold, callous, and extremely pragmatic when it comes to most things, that is why I'm good at business. That is why I'm good at investing, because I don't feel some type of way about anything normally. So we're going to get into the first clip. Let's see what we got going here. Establish. I'll clarify that. I was typing on my phone. Sorry, autocorrect got me. Fair enough. I'll take that L. establish private banking relationships should you use a bank. I am not an advocate. I don't believe in banks. Like, I don't like the traditional finance system. Like, I'm all in on crypto for a reason, because this other shit is rigged. Save in the market. At this point, when you're looking at inflation, saving in the market, you do not save in a bank account. If you're getting 5% yields, oh, actually, hold on. I did not show the clip. Wait a second. I'm going to share the tab. Okay, now we're over into the appropriate tab, so I'm going to do it again. But the part that I misspelled, I stumbled in this in the chat because I was typing on my phone while driving, which I shouldn't do. I'm sorry. But I had to get that off, and I was almost home. So, like, I was trying to get it off before, as I was pulling in the driveway. But it's established private banking relationships. If you are dealing with a bank, period, you keep your money in a bank, you're putting money in accounts in a bank, you should be building towards something. If your bank does not offer private banking relationships or a clearly defined path to get to a private banking relationship, you should not do business with that bank, with the exception of a credit union. I think everyone should have a credit union account adjacent to a standard bank if you should choose to go that path, because community, like a community bank or a one of those types of community banking situations, like a Community of America, First Federal, those smaller banking institutions, they give cheap money as well. But the reason you want a private banking relationship is because you get access to cheap money. You get free, a lot of free perks being a private banking member. Basically, the bank at that point starts working for you and with you to help you get wealthier. Your bank right now just charges you for stuff. They make their money off of you. And they give the money that they make off of you to the people who have private banking relationships, and they treat them better. So anyways, let's do this again. I am sorry.
That Reckless says establish private banking relationships, save, aim the market, but Bitcoin. What? But
buy Bitcoin, 100%.
Bitcoin. What about Bitcoin? Listen, Reckless. I want to hear what you got to say about Bitcoin. No, don't save in cash. No CDs. That's not true. My CD made me so much more money than my Bitcoin. Now.
Okay. So actually we're going to go to bankrate.com. CD rates. I'm pulling this up because this was another inaccuracy. So much money. Okay. So you're looking at, I'm going to share this tab real quick, and then we'll go back. So you're looking at, this is just a quick CD rates Google search. Oh, here we go. We'll go to NerdWallet. That's a solid one. Okay, so the highest right now for 5 years is 5.3%. That's garbage. Let's see. For 4 years, 5.3%. For 1 year, 5.3%. For 6 months, 4.15%. Okay, so 5.3% is the highest that you can get. I'm going to show one more screen so that way we can hash this out, because this is just math. If you look at the full inflation rate, I'll pull this up. U.S. inflation rate is currently at 3.18%. Prices have gone down on nothing. So that's just how much more it's going up on top of what it's already up. People. Because this is just math. And it's really upsetting to me that people will expound terrible financial advice. Even if it's just like the stuff that you're doing, like you're just doing bad things with your money. And they have platforms where people listen to them. But then they don't want to listen to the people like myself who are giving genuine advice. Not genuine advice, like not even financial advice. I'm showing you a different way that I'm rocking. But because somebody's popular for something else that's not their content, that's not their expertise. Y'all want to listen to them. So compared to 2.9% last month, but last year it was 8.25. So math, people, here's where I get upset. So it's just math. So if you take 5 minus 8, actually, hold on. No, I'll give you the full 5.3. 5.3 minus 8.25. That's last year's inflation. So the whole year, because we're like, if you want to go month to month, then sure. If you're getting 5% a month, you're good. If inflation for 1 month is 3.18% and you get 5.3% a year, you are losing money mathematically via buying power. This is not a hard concept to understand if you just do math and don't do feelings. But I digress. So you're 5.3% for your CD, security boss, with an inflation rate of 8.52 leaves you with 2.95% less buying power, which means that, yes, while the number on the account for however much money you had in there went up, you got to look at a number go up, but that number can buy less shit. You're going broke slow with your savings account and your CD based on math. It's that simple. So that's the first point. So now that we've gone through the math lesson, we'll go ahead and finish what you were saying, security boss.
It did. This is real. This is a real deal. I'm telling you, really, my Bitcoin made me no money. It's minimal. And my CD made me a lot of money. But you got to do something. If you don't have 5% is going broke slow. No, if you're not making any money, reckless, remember I said this is people that don't have homes. These are working people. They don't have a lot of money. You just said, what, about 3-4 comments back.
So working people or who are not in your situation, security boss, definitely do not have the capability or the time to lose 2.95 or hold on, what was it? Let me pull the calculator back up because I ain't trying to lie to nobody. Hold on, let me do the math again. 5.3 minus 8.25. They do not have the convenience or the cushion to be losing 2.95% in buying power with their meager amount of money. How do they get ahead? How do you buy a house if you're losing 3% in buying power a year? And that's not including the way that home prices are skyrocketing if they're saving up to buy a home. How do you keep up? How do you keep up with your bill? Most of these people are tapping into their savings right now, into their savings. So that savings account, those CDs that you're talking about, they're dipping into that money that now buys less stuff to buy stuff. They're going to run through that faster now because that's not actually keeping up with inflation or actually going up in value. But I digress. If we're just looking at numbers on the screen change and you're not factoring in the actual economic impact of what you're able to purchase, then the statement is disingenuous and coming from an emotional background. I am not emotional about this conversation, security boss. This is math. And I'm going to continue to just give you the raw math, the raw numbers based on the points. But this is the problem that we have, especially within our community of people of the older guard who are not up to date prescribing solutions that at this juncture no longer work effectively. Those are not going, I mean, I'll give you that it's better than absolutely nothing, but you're still fighting an uphill battle instead of going to where the ball's going. We always, historically, we go to where the ball has been after it's been played with, dumped around, and they've moved on to something else. The world is moving on to something else. This wealth transfer is happening regardless of how you feel about it. And I think that's very important that everyone understands that. This is happening regardless of how you feel about it. Now let's keep it moving.
$50,000 is the most they making. If $50,000 is the most they making, and rent is $1,400 for a single person in a 1-bedroom apartment, how much is that?
All right. So we've skipped through that. We're gonna go to the next one because like we done hit them points. Let's go to the next one.
I'm not gonna say it because maybe this ain't the place to say it. People lose money off of that. You need to be honest.
And you need to be honest. You can have an IRA that loses money during a depression because the market goes down. Let's be honest about that.
You need to be honest. Because I'm just gonna say just that much. You need to be honest. People lose money behind that.
100%. Very volatile. Cryptocurrency is very volatile. But when the first thing, a couple of things that we got to understand and be honest about is losing money, securing a loss, which you actually get tax write-offs for, just so you know, security boss, is when you actually sell. So people lose money during housing collapses, but we still understand the importance of owning a house and owning property. Do we not? I believe we do. I believe that we can agree on that. But in 2008, a bunch of people lost money. A bunch of people lost whole houses, security boss. Are houses bad? When the market collapsed, people lost money in the market too. Security boss, by your definition of losing money, the amount of money that it was worth went down at that juncture. Do we not invest in IRAs now? Are we not gonna advocate for ETF funds? Are we not advocating for stocks? Because stocks lose money. A bunch of businesses went out of business throughout the pandemic we just went through. So the people who are invested in those businesses that actually lost money, are we not investing in stocks? Because with the volatility of Bitcoin, and I'm going to show you this because, again, it's just math. Throughout the volatility of Bitcoin's still here. People were invested in businesses that went away, security boss. They actually lost money, security boss. So, I mean, if we're basing a comparisons and we're going to do this apples and oranges comparison, then the fact that Bitcoin's still here, the fact that it's still being utilized, again, we will go into that, speaks volumes about its staying power. But I digress. We can keep it rolling.
Dogecoin, Bitcoin, people lose money behind that. You need to be honest. Mutual.
And she threw in Dogecoin, which is a meme coin that rightfully so, people did lose money on that. 100%. Actually, at the beginning of this video with the X token sitting at number 1 on the top gainers. That's a blatant scam coin. It has nothing to do with the thing that it's portraying. Like, yes, if you go in and you're trying to get rich tomorrow, security boss, you are going to lose money. When you go into the casino, most of the time you lose money. A lot of people are trying to do some overnight quick stuff. And I understand, because when I came into this market 10 years ago, I tried to do the same thing, security boss. And I got my hand slapped. I lost money. I mean, honestly, I lost money then. I had another big loss that was a out of the blue loss. That was for what most people, actually, I lost more than the average black person's salary, security boss. But guess what? I made more than I lost because educated investment. You're not going to win on every play you make investing. Even in investing, you lose. That doesn't mean that the whole market or the whole thing is bad because you did it wrong. Because you didn't know. Which is fine. It's fine. But like, let's call it what it is. Let's be honest. Let's have these honest conversations and be honest about these things. If you don't know, it's okay to say that you don't know, or I was wrong. I've been wrong historically 2 big times, and I've had a couple of near misses, but 2 big ones. one to the tune of $20,000 and one that was over $40,000. So like when you say you got to be honest, like I've been honest, like I'm in back channels. I'm in groups where like I've talked about these things. I talk about my loses as they happen. Have I had any this year? No. Have I had any in the last 24 months that were major? No. Overall, the portfolio is rocking out because we're doing it intelligently. I am investing. I am versed in this market. I understand how it works. I know a thing or two. I've been doing it for 10 years. Like I've attained my mastery. So in the sense, and this is the thing that I would add, none of it's Bitcoin related. So what I've told you, like if you just do the boring thing, because just buying Bitcoin is boring, then they're literally, unless you only buy peaks, there's no way that you're down, because the Bitcoin in my portfolio, stalwart. It's a staple. I buy all the time. I buy a little bit every 2 weeks, Security Boss, regardless of the price, mind you. It's called dollar cost averaging. Now, if you do it that way, it's not possible that you're down. Just saying. But let's keep moving.
Mutual funds, IRA, Roth, you need to tell them the truth. I'm not going to say it because
and all those things that you just listed at the end there, you can lose on. So with that said, let's talk about actual numbers. So I'm going to share this screen for you, Security Boss. And we'll go ahead and blow this up. Now, this is from 2011 to 2021, Security Boss. As you can see at the top of the screen here, it's Bitcoin. Now, you can see these 4-year cycles that I was telling you about. It's a 4-year cycle. This encompasses 2 of them. Now, you had a 58% loss over the year of 2014. That's the entire year. You had a 73% loss if you actually cashed out. It just went down 73% in 2018 also. Now, you said 5 years. Now, over the cumulative from 2011 to 2021, this number right here, I'm going to highlight it for you. Oh, I can't highlight it. It won't let me highlight it. But it's 20,000. Or hold on. No. It ain't even 20,000. That's 3. That's a 20 million% gain, Security Boss. Annualizes. That's a cumulative gain of 20 million% with an annualized gain over that entire time of 230.6%. Now, the US NASDAQ 100, the ETF is the QQQ. That's what I look at as my aggressive savings account. Cumulative is 541.3%. That's actually not bad. Not bad, Security Boss. Not bad. Not anything close to 20 million, though. Because math. Annualized 20%. Also, not anything close to 230%. It's 10 times more. We'll keep going. SPY. It's the S&P 500. 282.4%. Not also, again, not bad. Not 20 million, but not bad. You know, like it's cool. It's cool. Annualized 14%. And it just gets worse from there, Security Boss. Like I can't like what are we doing? Numbers wise, this is math. This is math. This is the math that you do when you're an investor. I don't know what type of math entrepreneurs do, but this is the type of math investors do. 20 million beats everything. There ain't nothing gotten 20 million% gains. Nothing is annualized on average across all these numbers. And what they do is when you do the annualized, Security Boss, you take all these numbers and go, okay, for this window of time, this is you take that, you make the averages. I'm sure you're more educated than I am. I'm sure both you and Mr. Boss are way more educated than me. But that's how you get that number. And the math is the math. But I got more for you. So hold on, go to the next one. I mean, actually, I don't even know that we need to mess with that. We'll share this one instead, because I ain't gonna bore you, security boss. I don't wanna have to go that route, because like this is educational for you and others. So what we're gonna do, we're gonna close that. We're gonna go here. Oh, let me see how this is looking. Can y'all, let me make sure you guys can see this. So, all right. So hold on. This is a chart, another chart. And this is from 2020. Obviously, this is older. I'll give you that. But the data shows Bitcoin in 2020, 41.71% gain. SPX in 2020, the S&P 500 was down 4.45%. So everyone who was involved in the stock market, if you just got an ETF in your IRA and you just invested in the top 500 companies in the United States in 2020, you were down, or as you would say, you lost 4.45%. Bitcoin was up 41%. Those are facts. Gold was up 25% in 2020. We was running scared in 2020. 2020 was a hard year for a lot of people. It was some dark times. But minus 4.45% in your IRAs and your stocks. So like at the best from the stocks was QQQ, which was up 8.72%. That was the best it got. As far as stocks go, like, I'm sure you could say independent one singular stock, but even the one singular stock, though, like let's be honest. How many of you are that good of stock pickers? It's proven fact that most brokerages do not, most hedge funds, most brokerages do not beat the S&P 500 over the long term. But like maybe you got some wins that year, maybe you didn't. You're just a perfect investor. But the math again is the math. Bitcoin won that year, outshiningly. But let's keep it rolling. You are.
What do you mean? This is not false. This is.
Hold up. Let's go. Let's go back.
I'm saying either one. Pull up the chart for Bitcoin. You are drawing a false. No, I'm not. I'm a real recipient. What do you mean? This is not false. This is true. Reckless. I'm being honest. You want me to pull up my chart? I can show it to you.
Oh, I would love you to.
I'm being real serious right now. I'm not making up anything. I promise you I'm not. Because if it was making money, I would be right there with you. Be like, hey, bring it on, bring it on, bring it on.
But the reality of it is making money. I mean, I literally do not know if you are just so emotional when you guys make your investment decisions that you're not figuring out how cycles work, or if you had just gotten into the market at the peak, which is how most people come in. And I understand. Actually, you know what? I do understand that mentality. You come in, you try thinking you're going to get rich tomorrow, got your hand slapped, and you're feeling some type of way about it. But the key words in that statement is you're feeling some type of way about it. When I got my hand slapped for 20 grand, I went and figured out how I got my hand slapped for 20 grand. I didn't sit there telling everybody that Bitcoin's a scam, people lose money, IRAs are better, because IRAs lose money too. Like I've seen the numbers go down on an IRA. I've seen it happen. Your Roth. If the market does bad, the number goes down. Like you look at the number some days, it's negative. And actually, at this juncture, the S&P 500 is swinging with more volatility than Bitcoin is. So the number is red some days in the S&P 500. Security boss. I know, because I am also rebuilding my traditional finance portfolio for diversification purposes, because 85% of my wealth is in crypto. And I'd like it to be like 50-50 at this point, or start using the income that I'm making from crypto to start buying stocks, like hedge your bets. But one of the things that I did buy to hedge my bets was a piece of property. So when Bitcoin took its hit, my property value skyrocketed. So we still good over here. The issue is I don't ever look at that money. That's the other thing, is like, I don't look at that money. Like, I don't, like, I'm not sitting there. And that's the way that I know that you went about this all wrong. That's how I know. Like, I can tell from your attitude, your inflection. I know you didn't dollar cost average in. You guys went and made a buy on a run up and then got caught at the top, most likely, which is not fun. It's not fun to do that. It's also very hard to have the discipline to buy into something that has gone down to dollar cost average to bring your entry costs down. That's another thing that investors know about. It's your entry costs. So like, if you keep buying, like if you buy something up here and it drops down to here, Security Boss, and this is investment pro tip for you. The average of what you paid for all of your purchases is what your actual buy-in price is. So if you buy up here and it drops, and you believe in the project, or you believe in whatever it is you're investing in, and you continue to purchase into it, and it's the same with stocks. It's called dollar cost averaging. If you buy low when it drops, it brings down the actual cost of what you paid for the whole thing. And for some reason in crypto, people like make one large purchase. It's crazy to me. It's literally very ignorant. Like I understand, but I don't understand at the same time. Like, I understand from the gambling perspective, but like, this is how you get caught in the situation that you're in, to where you got to feel some type of way about stuff. Always dollar cost average, even with your traditional investments. It's always better to dollar cost average, because then you get the ups and the downs, and it levels it out. So that way you're not stuck at a peak. But let's keep it going, because I got two clips I want to do that are together. It just wouldn't let me make one long enough to encompass both of the statements.
But the fact that I lost was making me a little hesitant. Lost to the point you say, just leave it there. I'm upset now.
Now, see that, again, emotionality, you're upset, but you left it there. So there's still hope. There's still hope, Security Boss. I got faith that you're gonna at least be able to come out even. I got faith in you, and Mr. Boss. Go to the next clip.
It loses. It has lost over the last 5 years.
Okay, here we go. Now, I'm about to show you mathematically exactly how wrong this statement is, and I'm. Hold up a second. I'm gonna let it play out, because like, this right here is what I'm talking about.
Over the last 5 years, it has lost, and you know it. There's no way. You know it. It has.
These chicks are liars. Shout out, Ricky. Liars. But it's cool. We got the receipts and the math.
Lost over the last 5 years. Reckless, you know that. And if you don't, you gotta tell me, because we've done nothing but I ain't gonna say no more.
And luckily so. Okay, so let's get into it. First thing we're gonna look at. Actually, we don't need that one now. Hold up. So now, Security Boss, oh Lord. So you said specifically it's lost over the last 5 years. How did it lose over the last 5 years? If over the last 5 years collectively, this is from TradingView. This isn't me making this up. This is math. The last 5 years, Bitcoin has done a gain of 369.24%. That's the 5-year window up to now. Make it make sense. Because we on August right here. This was August 6th. Okay, so this is like up to current. up to current. Up to current. That's 5 years, Security Boss, versus via trading view. Via trading view. You are wrong. It hasn't made money over the last 5 years. Yes, it has. 369% correct. It has. How do we get so emotional about money, folks? Like, if you are emotional about money, if looking at money and you can't see the numbers change, don't invest. Don't invest in anything. If that's how you function, you will lose at everything. These are binary pass fail things. Math is a pass fail field. It doesn't care about feelings. It doesn't care about what color you are. It doesn't care about your background. It is just math, people. It is just math. That's my last Security Boss clip. Like, I mean, I hope that you understand. I hope that you understand now that when I say it's just math, that is a conversation ending deal. Now, if you bought here, right? Okay, so like 50s, you bought in the 50s, you was buying it here, or you saw this happen. Like in 2021, in the last 4 years, if you bought this peak of 65, yes, you are down money. Anywhere in here, you are down money. Now, let me explain to you, Security Boss, how Bitcoin works. It works on 4-year cycles, okay? So you'll have the year of the Bitcoin halving, which happens every 4 years. That year, normally, so actually we're about to run into another around, depending on if things run exactly how they have historically, we're running into another dip of about, I'd say, 10 to 20% for Bitcoin going into the halving. Then it will go up at the halving. Then it'll kind of go sideways, and then it'll go down a little bit. And then for the next 12 months post the halving, which is set for, I think it's sometime in April next year, you can Google, this is Googleable information. It's known. There's no secret here. It's called doing research. But the 12 months post the halving is when all, and like, I'm hoping that you're looking at this, when all of this happens, this is the year post the halving. So the halving was in 2020, right? That's when the last Bitcoin halving was. But like, if you look at where we're dipping, because like the last peak was about 20. We're sitting at the bottom, which is the last peak. The last peak was 60. So after this next halving, Bitcoin's probably going to be sitting around $50,000, $60,000. Like, it's going up over time, which is the reason that if you look, the 1 year it's up 20%, which actually is nice because I'm beating Bitcoin over the 1 year, which is cool. The year to date, it's up 77%, which, see, like, you look at this, we're preparing for the halving, but like, if I would have just bought Bitcoin, my portfolio would be even better for the year to date. All time, ain't even a question, bro. Like, we talking about 260, and that's per Trading Views when they started. Which, did they start? Yeah, they didn't. Oh, they didn't do 2011. So like, they barely did. 3, 4. But Trading View, 200,000% all time. I mean, like, we can't, these aren't arguable things. It's just math. And you can feel however you want. Like, but I do have something for you guys instead of the which is also important because this is not just me. So I think we'll do it in this order first. So this is a company, publicly traded company on the NASDAQ, Security Boss, that is called MicroStrategy. The owner of this company, Michael Saylor, started buying Bitcoin. Pretty interesting, right? Now, if we look at the max chart of this, Now, that's back in 2002. He started buying Bitcoin at about 2013. He's been in the market for almost a little bit after me. So I'd say he's probably like 2014, 2015, something like that. He started buying Bitcoin, right? And like, look at where the stock price is now. This is a company that holds Bitcoin. There are companies that hold Bitcoin, security boss. And I just wanted to go ahead and, let you guys in on what he had to say about this. His opinions. Maybe if we don't want to listen. I know these old heads. They like listening to the following the old white men around, going into those markets last after they've already been there. Well, Michael's trying to tell us where the ball's going, and he has been for a long time.
My question to you is about how specifically the average regular person can benefit from Bitcoin, because we just talked about institutions. Obviously, you're a successful public company with cash flow. You put it on your balance sheet. I understand that. I understand institutions, but the average, the normal person in the U.S. making $60,000 a year. I like a good beer, saving up for a jet ski, got a wife, soon to be wife at home. How can I best benefit from Bitcoin?
Well, I think the best way to think about that question is to consider the alternatives people have. So you're a normal person and you want to save money for retirement or to give to your kids. So you put it in a savings account, you get 5% interest. The monetary inflation rate is 7 or 8 or 9%. You got a negative real yield of 3%. If you end up with a negative real yield of 3.5%, then over 100 years, $1 million saved is worth $30,000. Okay, and so for the average person, saving money in bonds with a 3.5% or 4% interest rate when the currency expands at 7 or 8, that's a losing proposition. You lose 97% of your wealth over the course of 3 generations. So clearly bonds don't work, right? And savings accounts don't work. So the next question is, do I just put all my excess money in the S&P index? Well, traditionally the money supply in the US is expanding at 7% and the S&P index is going up at 7%. So if you save $1 million over the course of your life and you put it all in the S&P index, then in 100 years, it'll be worth $1 million. So that's wealth preservation, but you're not doing any better than that. And that just kind of assumes that.
So exactly what I said, he has also said. This man owns a company that's definitely bigger than any of our companies, probably all of our companies combined. But the thing that he just pointed out here is the savings and the CDs are going broke slow. Facts. It's just math. Saving in the market is wealth preservation. You're not clearing necessarily inflation, but you won't lose the money. Let's let Sailor keep rocking out.
That the S&P 500 is going to be relevant for 100 years, and you can stick around the country. But it's like treading water. The next issue is, well, so what I put in real estate? If you buy real estate, you're an average person. Can you buy a building? Probably not. Can you buy a warehouse? Not easy. Maybe if you're a rich family, you buy warehouses, right? Rich families buy warehouses, city blocks, and buildings, but the middle class person doesn't.
Again, now I understand the security boss. You are in a situation where you can do those things, but I tell people this all the time. When you're talking from your position, as we stated, most people aren't in your position.
So how do you buy $4,000 worth of a building? Can't. Okay. So the issue there is your property rights are inferior when you're buying shares of stock or a security versus the underlying property. If you own the building, you can mortgage the building, sell the building, upgrade the building, build 10 floors above the parking lot that the building has. You can develop the building. When you own a share in a REIT that owns the building, like you own 1/100th of the building, you don't have any of those rights. You can't do anything to the building. You're just along for the ride, getting 1/100th of whatever cash flow the general partner decides to distribute to you. And if they make stupid decisions, you're stuck with them, right? You don't have any property rights. You're inferior in your economic rights. So owning shares of a REIT to get property for 100 years, not a great idea. And that leads us to the problem of securities. What is the problem of security? So you have some money, you invest it in Apple stock or Amazon or Facebook or Google or a REIT that owns a building. The dilutive problem with securities is there are risk factors. First of all, there's a management team. They're going to take 1% every year. They're not doing it for free. They're charging you to manage the company or the building, right? And if you're lucky, that's only 1%. You want to see that in action? Just go look at any ETF. The ETFs charge 90 basis points. You know, if you want to put money into a Bitcoin, BITO or whatever, they'll charge you 90 basis points just as the management fee. So about 1%. What's the cost of 1% over the course of a lifetime? An infinite duration asset, you would basically multiply it by 20, 25. So it means that when I charge you 1% to manage your $1 million, I'm taking 20% of your money. Okay. I'm taking 20% of all your wealth to charge you 1%. So that's only the first problem.
And you can extrapolate that out to your IRA and your Roth if they're managed. Your portfolio manager is getting paid.
It turns out that when you run a company, you also have you have the risk of labor, right? Your company may unionize. So you've got labor expenses and what happens to the equity value when the company unionizes? Well, the union just takes all the profits and the equity values of those companies start to trend towards zero. So labor is another risk. The third risk is your competitors, right? Your competitor may come up with a better product and you end up like Yahoo squeezed out or AOL squeezed out by Google. Well, then your stock's going to zero, right? I mean, how many companies actually had a competitor? Xerox, Kodak, world's full of great companies. Where are they today? They end up getting squeezed by competition. The fourth issue is technology, right? You may just get obsolesced, right? Maybe you own natural gas fields or oil fields and someone creates nuclear power plants and they don't need your oil anymore. Or maybe you sell the world's greatest chemical cameras and people don't need cameras anymore. They have digital cameras. Right? There's always that kind of risk from technology. And then there's execution. Maybe you just don't ship the iPhone 47 to be that good, right? Maybe the iPhone 13 is good and the iPhone 15 is not good, right? And and the world's full of examples of that, like Firestone tires or something, and I ship a tire and the tire blows out, and now people stop buying my tire. Or New Coke. Remember New Coke is a product launch that didn't work out well. So when you're investing in a company, you're not just getting a pure investment. You're actually getting an investment in an asset, but you're getting hammered and diluted by force majeure, by bad weather. Yeah, you might get a war. You might get a tariff or a trade war. Like we just decided to put a tariff of 20% on all Chinese imports. Oops! If you had a factory in China, what happened there? And then maybe get a real war, where someone just impounds your ship or blows up your factory. That happens too. We have real wars all the time. So what's the return on the S&P index? 7% a year. What's the monetary inflation rate? 7%. What's really happening? Well, all these companies, they're just barely holding their wealth. And so what would happen if I got rid of all those risks? What if I could buy a product that was never going to obsolesce, that's good for 1 million years? What if there was no management team and they work for free, right? What if the product is run by computer programs that don't charge a fee? What if there's no labor? What if it's a digital product, so there is no chance to block it via a trade war or destroy it via real war? What if it was an indestructible, immortal, incorruptible product? Well, when you buy a Bitcoin, you're buying 1/21 millionth of all the money on the network. or all the money in the world that's ever going to be on that network. Okay, so would you want to own 1/21 millionth of all the money in the world in 10 years, 20 years, 100 years, 1,000 years, 10,000 years? The product's not obsolescing. It's 1/21 millionth of everything. You see, the iPhone will obsolesce. One day you'll be using Apple Vision, or maybe they'll put a telepathic implant in your brain and you won't need phones and you won't need goggles. And maybe you won't need televisions. Those things can obsolesce, but will you want 1/21 millionth of all the energy in the human race? Probably. Like the whole point of pure energy, right? Einstein said energy can neither be destroyed nor created. You can just transform it, right? It's a pure idea, and it's an idea that doesn't have competition because of the Immaculate Conception. There's one Bitcoin, there's one network that was created by a nameless, anonymous figure, Satoshi, and Satoshi gifted 1 million coins to the universe, never ran an ICO, never kept anything from a pre-mine, and the network now is just owned by the people. So how do you actually compete with that? It's hard to see how you compete with a pure thing like that. So it's a digital monopoly with no labor risk, no war risk, no product risk, no execution risk. Now, there is execution risk that takes place. So you have to set up Bitcoin miners. And if you set up a Bitcoin miner in China and they shut down Bitcoin mining, the miners lose money, but you don't lose money as the holder, right? So it's like the perfect monetary franchise. All of the work to improve Bitcoin is done by the miners, by the Bitcoin device builders, by the Bitcoin banks, right? BlockFi and Celsius can fail, but if you're holding Bitcoin in cold storage, you don't fail, right? The hardware company can fail, but you don't fail. And so if you study business, let's take McDonald's. McDonald's is a great business, but the reason they're a great business is so they don't really take that much risk. All the franchises take the risk. And so it's possible for every restaurant to lose money in the McDonald's chain, and the McDonald's Corporation still makes money because they've laid off that risk downstream. Other people risk their capital. So Bitcoin is kind of like this viral ultimate banking monetary franchise where banks will take risk, miners will take risk, individuals will take risk, companies will take risk. When the risks pay off, the Bitcoin holders benefit. And when the risks don't pay off, the people that took the risk pay the price, but Bitcoin just continues. It's very anti-fragile. So coming back to your question, right? How's the middle class family benefit from this? Well, Bitcoin represents pure digital property, global property. It doesn't have the dilutive elements of a security. It doesn't have the dilutive elements of a currency or a credit instrument or debt instrument. It doesn't have the dilutive elements of property, right? You want to buy a second apartment, an Airbnb. Okay, well, fine. Someone may move into it and trash it. You may have a renter that doesn't pay the bill. You may get rent controlled by the city. You may actually have a tornado hit it and trash it. You'll probably get a property tax on it from the city, maybe from the county, maybe from the state, maybe from the government. If you ever have to leave, you can't take it with you. And at some point in 100 years, the thing is probably going to have to be completely rebuilt and renovated to be usable again. So property is not a great long-term store of value. Credit's not a great long-term store of value. They're not scalable. You can't buy $437 of an Airbnb apartment every 2 weeks. So Bitcoin offers you apex global property. Theoretically, if the S&P index yields 7%, there's no reason why Bitcoin shouldn't appreciate about 14% in that environment. I think you get about a 7% real yield over the course of 100 years, whereas S&P index gives you 0% real yield. The best you can theoretically do with real estate property is maybe a 2% real yield if you're just really good at it. but there are just so many risks. Will your grandson or granddaughter be able to run the family property portfolio no matter what country they live in? And are you sure that any of 10,000 politicians aren't going to pass a law to destroy your property values sometime in the next 100 years? Think back from 1900 to the year 2000. And now imagine that you own a bar of gold in the bank in your city. What's the likelihood that you still have it 100 years later? Imagine you have a building in a major city in the world. Imagine you still have it 100 years later. Would you want to own a building in Russia, in Moscow, in Kiev, in Tokyo, in London, in Paris, in New York? Where would you want to own the building? Where would you want to own the bar of gold? It turns out that everywhere in the world, the gold got seized. Maybe you might have got by in Zurich, Switzerland, but everywhere else you lost all your money. Every bank failed, every currency failed. So your best bet is maybe you own property that they can't make more of. If you're lucky enough to own, if you owned a piece of property on the Gold Coast of Florida for 100 years, it went from $100,000 to $50 million. Good, but the property taxes on it probably offset the capital gain from it if it was residential. So the only way you could have actually made money owning property is if you own commercial real estate and you generated a rent on it in excess of the taxes and the insurance and the depreciation and the maintenance. It's not easy to do that everywhere in the world. So Bitcoin represents property rights, or the right to purchase perfect property that is maintainable, right? It's low cost to maintain. It's indestructible. The rain doesn't melt it. Tornadoes don't destroy it. And it's scalable. You can buy it with your weekly paycheck. And if it's liquid, you can sell it.
By scalable, he means that you don't have to buy whole Bitcoins. You can buy fractions of Bitcoin at your behest. Again, with the dollar cost averaging. Another key feature that your average person has over other things. Like when I first started in crypto, I was shaving off parts of checks, like $3, $1.25, 75 cents. None of the entrepreneurial things that you're doing, none of the IRAs. Well, I mean, I guess the IRAs, you can do that, but like you have to buy whole stocks. I mean, fortunately now we have Cash App to where you can do partial shares. And I've done a video on this, Security Boss, as well, because this is my content. Financial strategy and cryptocurrency is kind of my jam. So I do utilize Cash App for saving up lump sums of money sometime, because you can buy partial shares of stock. For instance, all the donations that I get on this channel, that I reinvest into the channel, I save in Cash App, because I can save it in the market easier that way, because I don't have to wait to buy whole shares. But my brokerage account, I have to put money in there until I hit a target amount to where I can start buying shares. Or if I put a lump sum in there, there's always some change left over that's not actively working, which is super annoying to me, because I have to buy whole shares. Like in certain markets, like they've made it to where it's not really made for average Joe, who is now 2 paychecks away from being homeless, 2 bad weeks away from being homeless, to be able to save in those means. Like they're forced to save in the banks and the seed. I mean, CDs even cost a lot of money. You got to have at least $500 most of the time. Like you can't just go get a $1.25 CD. Like that's not even how that works. But now that the CD and the bank accounts are basically at parity, like what's the point? Like if you think that like 0.25% more is doing something, it's not when you're going broke slow. Like it's just not. Like you might honestly at this point, CDs are almost pointless. Like, you might as well just save in the bank, because the CD, at least the bank, you have access to the money. The CD is locked up. Like, it's wild out here. But yeah, Bitcoin, you don't have to buy whole Bitcoins. You can buy fractions of Bitcoin. If you've got $5, you can buy some Bitcoin. You got $1, you can buy some Bitcoin.
Try selling at 1/100th of a building. Not so easy. You want to mortgage the building? Well, you can, a building in Kansas City, you could mortgage to a bank that deals in Kansas City real estate. But if you're Turkish and you have a building in Istanbul, there's only just a small number of banks in the world that will give you a mortgage on that. The mortgage will be in lira. The lira is losing 30 to 40% of its value a year. You got a problem. So Bitcoin represents global digital property. You can take it anywhere on earth. You can hold it for 100 years. In theory, you can hold it for 1,000 years. So you can take a very long view. And how many banks will want your Bitcoin? Well, you see what's going on right now is there's a French bank that wants to custody Bitcoin. There's a German bank that wants to custody Bitcoin. There's a Singapore bank that wants to custody Bitcoin. The banks in the UAE are getting into the business. The banks in Spain are getting into the business. The banks in the US are getting into the business. Right. And on the other hand, none of those banks want to give you a mortgage on your house in Arkansas. Only a local bank in Arkansas is going to get into that. Right. So Bitcoin represents a pure economic asset. It doesn't have the liabilities that come with securities and other forms of property and other commodities. And it's simple. And that's why it appeals to the middle class. I don't have a better solution for you if you're a working person on a salary and you want to take control of your own economic destiny.
Boom. And that's a very wealthy man. Hold on. We got couple more for you. Hold up a second. We're gonna go ahead and do this. All right, so I'm going to share this tab. So this is the first thing. It's funny because Security Boss stated multiple times that IRAs and these things that are going through the traditional financial avenues, which understandable. That's what the old guard does. They use what they've been indoctrinated with, which is totally fine. But those same institutions, this is BlackRock, biggest institution on the planet, and Fidelity, well-known, also big United States institution, refile spot Bitcoin ETF applications to address the SEC's concerns. Once they get a Bitcoin ETF, guess what? It's going to be in your IRA. It's going to be in your portfolios. Again, this is happening regardless of how you feel about it. The future's inevitable. And this is the problem. It's like, and I understand why, because Security Boss, her and her family, they old enough to where it won't affect them either way. They've got their businesses set up, they've got their stuff going, and they're good. They're set. They're going to get to die off on this planet, and they're going to be in a good spot. I don't think they're probably in the NBA at this point at their ages. Never broke again. They good. But the problem is the people that are listening to you, who are not in your position. Most of these people that are listening to you are going to be peasants forever. And you're poo-pooing on opportunities for them to become a part of a wealth transfer that they may never see again because they're shutting the doors. Like the way that you got it, not everybody can get it that way. The way that I got it, not everybody can get it that way. But these are options and they're coming. So like once this hits your portfolio and they're putting an allocation of Bitcoin in your IRA, what are you going to say then? Where are you going to be at then? What's the next pushback? I'll tell you what the next one is. Oh, I could have done that. We could have done that, but like we stopped because we lost some money. It's going to be just like in 95 when the internet started. Cause I grew up with black folks. Y'all wasn't about the internet. Y'all was leery of the internet. Some of y'all still don't buy stuff on the internet. But did the internet happen? Yes, it did. Did people make a lot of money? Yes, they did. Did we? No, we didn't. Because we didn't participate. We just sat there making conjectures about the little bit of money that we lost. Like, and then watching all the rest of the opportunity pass you by because you did it wrong, because you didn't educate yourself, because you didn't know. My last article for you. This is BlackRock talking about what you should do with your money. It's what BlackRock's advising their investors. These are the wealthy people, wealthier than all of us. Suggesting an 85% Bitcoin allocation for risk on portfolios. Those are the aggressive portfolios. Those are the medium to high risk portfolios. They're telling you to invest predominantly in Bitcoin in those portfolios. This is via LinkedIn. Like, I'm not coming with receipts that I'm just making up or conjectures or telling you how I feel. This is what happens when you actually are involved in the markets and you do the research and you look at what the people who actually have all the money are doing. Not a hard decision when you see the ships picking up sail and going to where the future is going to be. At what point are we as a culture going to start going towards where the ball's going versus what's already been rifled through where the game's rigged for you? When are we finally going to be there when it happens? I mean, I understand that there's going to be some of us who are going to be there, but we're fighting tooth and nail with people that we're supposed to be getting poured into from. And this whole, like, I'll tell you straight up, don't listen to old people about money right now. Not even old rich people. Like, if they're not moving into the future, do your own research. You need to take everything that they're talking about with a grain of salt, because these people are disconnected. They are not moving at the speed of technology. They are old. They are calcified. They are no longer growing in those respects, especially wealthy people, because this doesn't affect them. This doesn't affect the security bosses. She already rich, apparently. I know everybody on YouTube's rich, but like, they got actual businesses. So this doesn't affect them because they'll still be able to generate income until they're old. And then when they're old, they'll have enough cush to, go into the sunset comfortably. But do you have that level of privilege and comfortability? Are you getting it out the mud? Are you building? If you are, then you might want to take note to what's coming, what's happening, what's going on. You can look at your bank account now and see that you can't buy stuff. You can't buy as much stuff. Your pay rate hasn't gone up, but the price of everything else has. These people are being disingenuous because they feel some type of way because they were right for a short period of time and did not evolve with the times. And now they're resting on the laurels of what they did over 5 years ago. 5 years ago, financial advice don't even work now. Pre-pandemic financial advice don't even work now. You can do whatever you want, because I don't think you should listen to people on the internet, period. But like, if you're getting these ideas, you need to go through and do your own research and actually figure out what's happening, because this is simple stuff. Like, this is not something that is arguable. Like, you do not argue math. Math is not arguable. The only reason that there's any pushback on this is because people feel some type of way. And unfortunately, math and facts do not care about your feelings. There is no your truth in math. I've given all the receipts. This is the reason I'm not fun to argue with, generally speaking, if it's something that I'm willing to stand my ground on, because it's something that I know about. So your portfolio, I'm guessing you bought a peak. I'm guessing you didn't continue buying. I'm going to make some guesses here that when the number went down, you felt some type of way. From what you've said yourself, either you did not buy Bitcoin or you did not buy 5 years ago, like you stated. You have not been in the market for 5 years. You came in the last bull run, which I understand. It was exciting. Bull runs are exciting. The next bull run is going to be equally exciting. Since you are sitting on those coins, you will have an opportunity to get your money back, because we're definitely going to go back by the peak that you bought. And we're going to go higher than that. And then it's going to drop again. And then we'll be sitting probably around the peak that you bought. And that's going to be the new bottom. So hold on. Hold on to your horses. You'll be able to at least break even, security boss. And you guys go ahead and get out of the market and just keep doing what you're doing and go into that sunset. But don't talk about things that you do not understand, because it's harmful to the people that listen to you. And I won't bring it up on your channel ever again. But I made this specifically for you because I understand that there's some old folks out there who don't get it. And hopefully the way that I broke this down so that people can understand the difference between you gamblers who come into the market and those of us who are investors and those of us who have been here for a long time, that have put in our 10,000 hours, who've put in the research. We've been active in these markets. The markets, we understand how they work. We understand how to navigate them. It's new stuff. And it's okay to say that you don't know. It's also okay to tap in with people who do know, because that's why those of us who are doing this content are doing this content. And you can go back and look at the older videos. I've been very consistent with this. I've been doing this portfolio for the bag chasers over in Anton Daniels groups and Anton Daniels bag chasers for over a year now. And I started a portfolio specifically for them because they were asking questions, and it was easier for me to do this than write out long form sentences. And then I figured, probably be good to show them how a portfolio starts off, how to build one, how I look at things, how somebody who's actually in the market that has attained stuff looks at things. Because this isn't financial advice. This is what I'm doing with my money. But we're getting the results. We have the receipts. And like, for anyone who wants to argue with me about crypto, have your receipts and not anecdotal ones, because there's no math that you're gonna put forward that's gonna say anything besides what the Bitcoin chart says. Like, you can't finagle those numbers. It's math. Math is not arguable. Math does not care how you feel. It's your boy Reckless Ray Dinero. Till next week for crypto portfolio updates, and until I get this outro made and the branding done, let's go.
Let's go. Let's go. I pull up.